really understand the quality of the asset that you're buying, right? I mean, we own a bunch of properties they're in a great location, but they're built 100 years ago, right? They're in downtown locations. And, old buildings take a lot of daily or, not daily, but repairs and maintenance, right? So
Yeah.
they're expensive to run.
This is Josh Appleman, founder and CEO of Appleman Properties. Today we're joined with Jens Nielsen. Jens is a Danish immigrant turned real estate mogul and high performance coach, owning over 1,700 apartment units and a 34,000 square foot warehouse. With a background in IT, he focuses on asset management and capital raising while coaching others in multifamily investing. Jens, we appreciate you coming on today. If you could, let the listeners know a little bit more about yourself.
Yeah, thanks, Josh. I'm excited about our conversation today. So, as the intro said, hey, I immigrated from Denmark 27 years ago, I think it is. Did the traditional, got my education, went to college, and worked for other people for most of my adult life. And it wasn't until like my mid 40s I realized I had to make some changes. Otherwise, I would just be working for other people for the rest of my life. But I looked around, everything else looked like, oh, it's just another job, right? A consulting or starting my own kind of, IT business and stuff. And nothing had really any kind of passive income, at least not for the foreseeable future. And then I kind of stumbled on real estate back, 7, 8 years ago. And it's like, wow, here is actually an opportunity that may make sense. And I reached out to a few people that I knew in the local market, and it's like, oh, here's just how you underwrite. How you buy some properties. And I think between me thinking about it and taking action was just a few months. But that was all my own capital. So I bought, a couple of fourplexes down in Albuquerque, New Mexico, early on. And then you kind of run out of money. I thought like we did. Me and my wife bought two fourplexes and then 11 unit in the first year. Like, oh no, now what? We don't have any more money, and we had to figure out what the next step was. And that really was, to start partnering with other people to do larger deals,
Yeah.
and started syndicating, the joint ventures and syndicating there in 2018, 2019. And we've kind of been doing that ever since. So that's a quick intro, and we can certainly dig into any aspect of that story that you would like to.
Yeah, because it's exciting to hear from where you started. You started from absolutely zero as far as real estate goes, zero properties, and you grew your portfolio to a massive portfolio. What what was the first property like? How did you find it? How did you take it down as far as debt goes, and then managing the properties?
Excuse me, very straightforward. Just a fourplex listed on the local MLS. I think I contacted my broker, and we ended up buying that one. And it was like $117,000 for 4 units in Albuquerque, New Mexico. It was probably a D property in a D area, but hey, it was cheap and it got me into the game.
Yeah.
Got some, just a regular mortgage, 30-year fixed mortgage on there, and I think one of the biggest things looking back that I learned or accidentally stumbled upon at that time was that I lived, what, 3.5, 4 hours away. So I couldn't self-manage. And I think that kind of saved me, because had it been in my local market, I'd probably try to self-manage and I would just become this, owner operator and just get swamped with dealing with tenants. And I'm not a person who wants to deal with the hands-on. That's not my style. So got a property manager on there, and I think that kind of saved me from going insane by trying to manage my own properties.
Yeah, property management is a whole another animal in itself. And it can definitely keep you stuck in the trenches for sure. Um, what inspired you or pushed you to get to start to do your first syndication, and then tell us about that property and how that process went?
Yes, I think, we did a joint venture in between. So I think the stepping stone was probably the joint venture. If you want me to maybe share a little bit about that, because that was my first experience with getting, quote unquote investors in, if you will. So I can talk about that. And that was also in Albuquerque, New Mexico. And my broker, who had sold me a few deals, I had said to him, hey, if I find something bigger, do you want to partner? He's also an investor. He said, yeah, sure. So I found this that was actually listed on LoopNet in like 2018, a 38 unit property, and we needed a little bit of equity there. So him, myself, and a couple of friends, we went in and kind of, joint ventured on that. And that was my first experience where I basically was talking about a deal to people that didn't necessarily know a lot about real estate investing and so forth. So it was a lot about education. It was a lot about, running the numbers, getting them comfortable with the projections, and learning a lot along the way, right? When things don't go exactly as planned, how do you communicate that? How do you stay on top of informing your investors, but still trying to, execute the business plan and so forth. So that was my first kind of experience of quote unquote raising money. And that gave me I would talk to anybody I knew about real estate investing. So over time, I started to have like a list of people. So when in 2019, I got the opportunity to join a team that were syndicating a deal in a suburb of Atlanta, Georgia, and 212 units. And I partnered with them, kind of as a co-sponsor, as underwriter and stuff, and was able to raise some money for that. And that was like, oh, now I know what it looks like to do 200 plus unit essentially.
Yeah, and then getting that experience of the entire team coming together to take down a large deal, and then your limited partners on the other side, because
Absolutely.
there's a huge difference between your scattered smaller apartment sites and then your large apartment complex with the way that you can manage the deal, effectively manage it. Um, and then I think there's a totally different caliber in property managers as well when it comes to the smaller scattered sites versus the large properties that can afford on-site staff for every component of the project. Um, that's the company that you went on a GP with on your first syndication. Is that who you're currently with as well, or have you transitioned over to another?
No, that was just an opportunity at that point to kind of join to get some experience and then jump in there. They've since gone off and done their own thing, and we split ways. We sold that property, made a good profit, and they went and did their thing. So yeah, but that same year in 2019, I met my now partner. Went to like a real estate seminar and um, sat next to this guy, and we started chatting and had some beers that night, and kind of liked each other. And he was doing his second syndication at that time. This was up in Erie, Pennsylvania, of all places. And we partnered on that deal. And that was I started learning how he operated, and we became friends. So did one in 2019. We did, 3 or 4 in 2020. And that has kind of just grown on. I think we've done 20 plus deals together now. And we basically work together. I just got off a call with him. We basically, on Zoom calls every single day, and we work together now as a partnership, which I really like because I know him, I'm friends with him, and it's much more integrated. And I feel like, we have a better control of what's going on versus joining various partnerships out there.
Yeah, yeah, you get to know each other's next move and essentially kind of know the tool before you need it on each side. Um,
Absolutely.
so you all are asset managing, meaning pushing the property management to make sure that they're squeezing the bills, the expenses, and pushing the rents. Is that correct?
Yes, I mean, the unique part of our partnership is that he's also the property manager, so he is managing the properties as well, right? But there's still that level of, his goal as a property manager is to fill the units and manage the tenants, collect rent, and so forth. Me as a syndicator, as a general partner, I have to also look at, are we following the business plan? Are we staying on target with our income and so forth? And that's kind of where because I'm far away, right? I live in New Mexico, and these deals are in Ohio and Pennsylvania. So I try to stay in the background and just monitor results, monitor the business plan and the income and the expenses, and try to hold the groups accountable to those expenses and income and so forth.
Yeah, and that helps having a second set of eyes on everything. Just you catch certain things that other people might not be looking at. Um, so that's are you with Open Door Capital currently? Is that correct?
Well, so this is Open Doors with an S, so it's not related to Brandon Turner's company, anything
Okay,
like that. So
got it.
just, and actually we are rebranding. So for any of your listeners, it's the new company is Incrementum Equity. That's the new company that we have. So we're kind of moving away from the other company to make sure we don't get confused with it. So
Got it. Well, and I just wanted to make sure and clarify on my end too, 'cause same industry, of course, and capital raising and apartment investing, so that makes sense. So 1,700 plus units. Uh, what did it take to get there, and what steps did you have to take personally to evolve?
yeah, I mean, from somebody who was probably a bit of an introvert that was most comfortable sitting behind a computer and doing, because I was an IT guy, right? Just doing my IT work forever. It really, I had to start, getting uncomfortable and getting out into the world, right? Because you can't really have an impact by being just in your house or in your office all day. So it took, joining a coaching program. It took me going to events, connecting with people, starting finding ways to adding value and so forth, right? But also talking to as many investors as I could, get an opportunity to talk to, and really start, you know, sharing learning a lot, and then sharing what I had learned, and really just starting persuading people and influencing people to the fact that real estate investing is such a great asset to be in, right? So it was that getting uncomfortable and started like changing myself, and that took a lot of coaching and mentoring and so forth. And then also, just starting to show some results, right? I mean, once you do your first and second deal, if you don't create results, people are not going to invest with you again, right? So you start having some good returns. Another thing, and people, they continue to come back to you, right? So that's the other aspect of it, but it took definitely a lot of self-reflection, a lot of self-development in order to get to a space where you're comfortable going out there and raising money.
Yeah, you hit it on the head too. Getting into a mastermind, getting into the room where you've got an alignment of interest with other people, and that's where you gain the knowledge, and I think gain knowledge to the next level, because you can get yourself to a certain point, but then it's going to take someone else to take you to the next hurdle. I feel like.
Yeah.
Do you want to touch a little bit for beginners listening in, wanting to get in on what that looks like as far as mentorship and joining groups?
Yeah, I think, there's of course groups out there that'll charge you 20, 30, $50,000, right? I don't think you should do that, because a lot of those are, you know, that's probably more money that you need to spend. But I would find a way to surround yourself with other people that's doing what you're doing, right? So definitely go to some conferences, maybe signing up for a program that seems more affordable, and then also start finding that peer group. So I think one of the early things that I did, I would go, I was living in a small town in Colorado at that time. I didn't really have anybody around me. So what I was like, I would go to Florida, I would go to Dallas or Texas or Denver, and I would meet people, and I would see the same people, at various events, and I'd say, hey, Joe and Paul and Sue, do you guys? I really like what you guys are doing. Do you guys want me to set up a monthly Zoom call so we can all get together, hold each other accountable, move forward? And that really helped me, because then I would get around those people regularly, and they were doing things, and I would be inspired to do similar things, right, and push myself. So you have to find somebody that's a coach, a mentor, a peer group, a mastermind, a meetup, just something where you get out around people that are doing what you want to do, and ideally they're a step or two ahead of you, so you can kind of be inspired by them, trying to quote unquote keep up with them. That's really super important, right?
Yeah, yeah. Everybody pushes, and you just get there together. Success is funner when you have other people to celebrate with. I feel like it's can make big wins bigger. Tell us about a learning lesson. One of a bigger learning lesson that you've had.
Um, you know, I think one of the biggest, some of the challenges that we faced or are facing, right, is we're underwriting deals in 2020, 21, and interest rates are super low, and nobody could imagine that interest rates was going to do what they did, right? So we did one deal where we bought it on floating rate. It was a bridge floating rate debt, and we're like, oh yeah, maybe it'll go up a couple of points. That's still okay. And we did not buy a rate cap, and our lender did not require us to buy a rate cap. We just, nobody had the experience of what could possibly happen. So our rate went from 4.5% to like 9.5% in a matter of 12 plus months, and we were getting crushed, right? Because suddenly our debt service was so incredibly high. So, luckily we were able to refinance it and kind of, we were able to save the deal, right? But it wasn't, oh, we're gonna get this huge cash out refinance. We're basically able to break even on our loan, get it refinanced, right? And can now, breathe a little easier because our debt service has been reduced. But that was a huge learning. Like, just because you haven't seen it, it doesn't mean it can't happen, right? Don't just assume that interest rates are going to stay low, and really come in with some solid plans and protect your downside to some degree as well.
And that goes back to, you don't know what you don't know. So even the moon's aligned, everything's going great. No one could see the Fed raising the interest rates as fast and as aggressively as they did. And there's a lot of groups that are still hurting big time from what's going on with the floating rate debt. Time will tell what that looks like, but I mean, the past 2 years, I think, has been a challenge in the debt markets in general. But if you can underwrite the deals to make them make sense, you're essentially buying the deals on discount right now. If you can make it happen and make it work.
Yeah, absolutely.
I keep hearing everyone just survive through 2024, and it's like, see what happens after that. But that's
Yeah.
What would be, if you knew then what you know now, what would be one of the biggest changes that you would make, if anything?
On that specific deal,
Just
or
in general, getting into real estate and investing and your path.
yeah, I mean, I think really understand the quality of the asset that you're buying, right? I mean, we own a bunch of properties they're in a great location, but they're built 100 years ago, right? They're in downtown locations, and old buildings take a lot of daily, or not daily, but repairs and maintenance, right? So
Yeah.
they're expensive to run, they're expensive to heat. So it may be worthwhile, looking at newer asset classes in maybe even garden style in one location versus having a portfolio spread out that requires a lot of that. So I think as we move forward, higher quality assets is going to be one of the things that we're going to continue to look at, right? Come in, you want to have plenty of reserves, right? Because one of the biggest things that we see in every property we take over, there's always that dip of income and occupancy early on, right? So as you kind of dig yourself out of that hole, don't promise your investors you're going to start distributing next month, because it's probably not realistic, right? Have a realistic plan that says, hey, this is a longer term game, and you're in it for the long run. I think those are some of the key things that we've learned that we need to communicate with our investors on a regular basis.
Yeah. You got to have a grace period to restabilize, see what true bills are coming in, what the cash flow looks like. 'Cause the rent roll is never the effective rent roll is never what it seems to be on paper. It's and then you always find out who the bad actors are who haven't been paying rent, and you got to get them out. So there's definitely a period of time you have to restabilize, find out what money you've got to work with and what you need to do, and then take it from there and make it into a great asset. And
Yeah.
as far as purchasing the we'll call it better assets, as far as newer and vintage, it's always harder to swallow the 150,000 to 250,000 price per unit price tag you have. But 20 years from now, you'll appreciate yourself, I think. It's just
That's right.
but it kind of goes against there's different strategies. I think you're in a value add strategy where you're buying at a basis to where you can afford to put renovations on each unit and still not be at a negative cash flow. If you're buying at a core price where you have to do renovations to to reach a premium, but the property can't afford renovations. It's like you're playing devil's advocate there. You're damned either way.
Yeah. Yeah, and I think the other side to that is right. If you're a life company or something where you're like, oh, we're happy with 3 or 4% return, you can do something like that. But I
Yeah,
mean, right now, no investors are going to put money in on a 3 to 4% return, right? They can go and get more in a CD. So
yeah,
we have to find a way to push that, right? And there is, the value add strategy is the way to push it. Of course, you also taking on more risk when you're doing that, just because of, that's the nature of the game, right? So.
yeah, yeah. There's a balance, and just buying right, which every property there's a balance. Just finding it, and if you're dealing with someone totally unrealistic, then there's no deal anyways, as far as the sellers
Exactly.
go. Um, what path would you tell a beginner real estate investor? What path would you tell them to go? Would it be limited partnership, learn how real estate goes, or find a general partnership, or find deals, do it on our own? There's a lot of different paths.
There are so many different paths, right? It really depends on, your own kind of financial situation, right? If you have, like me, I was in my 40s, I had saved up some money. I love owning my own assets because I don't have to answer to any investors and stuff. So if you can go and buy something with your own capital, and that, I wouldn't go and buy single family houses because then you're in a different space. But a small multifamily, I think that's a great way to start if you can. If your own capital is a challenge, but maybe you have an IRA or something. I do love the LP side of things because you can expose it to a new market. You do see how operators are running their business, and learn from that, right? And if you do absolutely want to create a business out of it, but remember, you know, being raising private equity, being a syndicator, that's a business. And a lot of people trying to do it on the side, which you can get started, but it's really hard to stay on top of it. So if you want to go down that route, that's fine, but really look at it as a business that you're dedicated to for the next many years, and you're willing to put the effort in, right? And you're willing to build a team and raise the money and do the asset management, right? Because there's nothing free in this world, right? And it's going to take a lot of effort, regardless of which direction you take it.
Yeah, yeah, and you could raise capital from investors, but ultimately the investors are trusting you because they're investing alongside you. So asset management goes along with that, and vetting great deals, vetting the sponsors, making sure that the team is competent and able to execute on the business plan like they claim they can. Um, it goes along with being who you say you are and do what you say you can do. And I, that's the tough thing with syndications. You've got a lot of gurus pushing it, but there's syndicators out there that haven't owned a business in their entire life, and you have to be able to pivot and make moves very quickly in business. And the same grit and grind is in syndication. Multifamily is a business as well, and it's hard work. Everything's hard work. Anything worth doing, I think, is hard work.
You're absolutely right. And just what you said about, the gurus pushing it, yeah, for sure, right? I mean, I think the business did itself a disservice because anybody that could raise money and buy a deal in 2019, 2020 and sell it 2 years later would look like a freaking genius, right? But they were just super lucky riding the wave up. That is not the reality right now. And those are the people that you talked about that are in trouble, right?
Yeah.
They're like, oh crap, we can't get out of it. We actually have to operate this deal, and we didn't really think about that, right? And everybody is like busy with other things, and they're not paying attention to it. So, it's a long-term business. It takes patience, and you got to really be diligent every day on it.
Yeah, but think of it. You have real estate or you have a stock market. You can see the real estate day in and day out. You can go field, touch it. You've got debt pay down. You've got cash flow. You've got depreciation. You got multiple ways you're getting paid. Whether you see it in the bank account or not, you're still able to take advantage of tax structures. So it's more advantageous even on a dip. You're still getting your returns. It's just when you come back out of the cycle, you're sitting in an incredible position to then take advantage of your long-term gains. So
Absolutely.
I love it. If somebody wanted to reach out to you, how can they get a hold of you?
Yeah, so my website, and it's called incrementumequity.com. and you can probably put that in the show notes. My email is actually my old email address. It's jens@opendoors with an S capital.com. That's the best way to get hold of me. I'm on the socials, but I'm really an old school guy. Email is probably the best way to get hold of me.
Awesome. Very cool. Certainly look forward to following you. You guys are, your growth is incredible, and look forward to talking to you soon.
Thanks, Jess.
All right.
Appreciate it.
Thank you. Bye.